We're going to talk some currencies, some commodities. We're going to jump to our man Teddy Kekstadt. Folks, if you haven't checked out Teddy's outstanding newsletter, the Tiger Forex Report, check it out right under the newsletter tab at TFNN.com. You can hit that subscribe button. You gain access to one of his lovely archive webinars out there. It's $97, folks, and it comes with a 30-day money-back guarantee. So you get it for 30 days. You decide whether it's something you want to keep. If it's not, that's cool. You can cancel, get a money-back guarantee. You watch the archive. You get Teddy's outstanding newsletter for 30 days. And don't forget about a couple of great webinars under the services tab out there as well. Teddy Kekstadt, good morning.
Morning, Tommy.
So we got a little bit of dollar action above 104, Teddy. We got yields chopping around. We have some market action, but what are you watching in this market this week, man, as we digest some of the constant volatility we're dealing with right now?
Yeah, dollar strength right now is definitely the topic of the day for sure. So crude also is pretty strong as well, besides the fact that they switched to the summer mix also. So everyone sees that, what's going on at the pump right now. I don't know about in Florida, but in Chicago, the prices have jumped like basically 60, 70 cents in the past week, week and a half.
Wow. Yeah.
So, yeah. So, I would say the dollar right now, it's very, very strong for multiple reasons. It's basically because of the economic numbers. And then also, you got to look at the numbers that are coming out as far as for like Europe, especially, like tomorrow and stuff like that. Like we have GDP, we're going to be leaning on that one, and especially unemployment claims as well tomorrow. And then also on Friday you have numbers for Germany, which is going to be very crucial for the euro. So I think that you're going to probably see the dollar right now ticking higher right now. It's taking advantage of what's going on in the world.
Yeah. And it's been, let me ask you, because I look at this myself, of course. It's like, man, we've had quite a decline from 110 to 103, and we have a bounce to 104.42. Where's the area in this move, Teddy, that you might get a little hesitation? Or, I'm saying, okay, we got a bounce going. We only got a bounce from 103.3 to 104.4, and we just dropped from 110. So we get some natural bounces, but is there an area on the upside here that might, give you the 105, 106? It's just the move was so big lower that we do have a little bounce, but I'm trying to, in my own head, say, okay, wait, is this bounce meaningful when the move lower was so big? How are you looking at that one, if I can ask?
Absolutely, that's a great question, Tommy. Right now, no matter what, I'm looking at it as a corrective rally. There's no reason to think that there is a solid trend fundamentally or technically emerging. I think that we are definitely overdue for a decent correction, and actually up towards that, I would say that 105 to 106 area is going to be where if the market is just in a corrective phase, that's where it's going to spike into and fall off of. Get above that 106 area, then you're coming up into where the market was in a range trade it was the bottom of the range trade that it was in for months before it actually really fell out of that, pattern. So if it gets above that, well, then you're back into that same story where we were months ago. And here's the thing is, fundamentally, especially, we still do have at least 1 to 2 looming rate cuts. It's hard for that to probably manifest. That's why I'm thinking that if anything, you spike up into these areas. Now, that's just because of what's going on right now in the world. Once again, like these numbers in Germany and also in Europe over the next couple of months, they're going to become very, very crucial, especially between the UK and with Germany. Those two countries, financially, they're everything from manufacturing to their service sector, everything is in decline. Like the GDP growth of Germany alone in the past 10 years has been literally 20% over 10 years. And it's in decline, and it's in decline right now. So that's really, really, really bad, So I mean, I know that I haven't been bashing the UK and the EU. It's just fundamentally what's going on. The numbers are reflective of that. So I think that as these numbers come out, if this trend continues with that, that's where we find out whether the dollar is going to be strong or not. If those numbers actually start to go that way, well, then we're seeing the dollar back up at 109, 110 easily. We could be challenging the highs of the beginning of the year if those numbers in those other countries really reflectively start to collapse. So it's not so bad. Like, our condition doesn't need to be rosy for the dollar to be strong. Okay, sure. Especially when we have looming rate cuts, so that already restricts. It should restrict any rally right there to begin with. It should give a reason for the bears to jump in and catch a nice break to the downside, if you will, right?
Nice.
So, and I think that you really have a lot of poachers there waiting for a high ball to sell. Why wouldn't you? You know what I'm saying? Like right now, right now to be selling into the dollar is kind of foolish. Like, we're not that far off the lows, and this is not a really big high. Like, we could be just digesting and establishing a range trade for the next couple of months in this area. Like, the low may be set, and maybe the dollar only gets up to 104, 105, and then keeps bobbling between 103 and 105 for the next 4 to 5 months. That's a very possible situation. Okay, so just because, I mean, markets don't tend to go in straight lines, but they don't necessarily always try bounce and go up or down. You know what I mean? Come off of highs and retrace. You know, they can also settle into a digestive phase. Remember, we were coming out of a big range trade that started back in, what was it, middle December until the middle or beginning of February. So I mean, it was volatile in that range, but the dollar didn't go. It wasn't breaking out to the upside, and it wasn't falling down either. Yeah. We finally come into this trend where right now, I mean, we had a nice head and shoulders pattern that set off this break. Now the market has already hit our downside target level that we have in the Forex report. We've been bobbling off of just trying to spike low it, and no matter what, only once did it close below that line. Every time it would go below it, it would still pop back up and close above it. So that's already giving us a solid support base. If we can fall below that, like, especially if we can get below, 103? There was 103. Yeah, basically 103 even in the U.S. dollar index. Okay, in the Dixie. If it closes below that, well, now we know that what we just saw right now was definitely a corrective rally, and the selling pressure is just that strong. But once again,
great information.
It's once again, you got to watch these other fundamentals. So sorry, Tommy. That's no. It's
great information, folks. Check out the Tiger Forex report, because that kind of speaks to my question, Teddy, in terms of, man, the move is so big, right? What does this type of a bounce mean? Can you hang with us for one more segment?
Sure, no problem.
All right. What do you? Maybe I'm going to ask you. Do you look at copper, Teddy? Can we look at copper? You take a look at copper at all? We got questions in the den. You ever look at the copper? Sure. Some of those.
I'll take a look at it right now.
All right, we'll take a look at copper for you, EKS. We'll take a look. We'll talk some copper. We'll talk some crude oil when we get back to it. I want to ask Teddy about. Welcome back, folks. S&P's negative by 10, NASDAQ 100 negative by 110. We're talking to our man Teddy Kekstadt. And folks, don't forget, check out that Tiger Forex report right under the newsletter tab. And copper's been in focus, Teddy. I got the headline up here: the Trump imposing copper import tariffs in weeks, not months. Yeah, that went out from Bloomberg last night, I guess. But copper's had quite a run, so naturally we got some tigers and tigresses talking about it, man. Saying, what do you think of these prices? Are they sustainable? We're at $5.28, up from $4 to start the year. But I was wondering, I know sometimes commodities, of course, you've taught us so much about crude, how that matters into different currency pairs. But, we had some questions about copper. Do you take a look? What do you think? Quite a run.
Oh, great day to ask about that one, isn't it? I'll tell you what. Well, whenever people ask me about commodities, I get back to the futures, So I went to my website, forex-trading-unlock.com, went to my commodity section, pulled it up, and obviously the market's in a very strong bull trend. What it just did right now, like if copper was to close where it is today, it's still a very good bullish indication on this trend. Like right now, you have a high probable Japanese forex pattern going on right now, right? So if you look at what happened in the last 3 sessions, how it closed slightly lower, but really was in a range trade after having a really strong up day, looking like it was trying to top out. The rally we have today, like I said, if it can stay where it is and close above yesterday's high, that's a very strong indication that we're going to keep on trending higher for the next, let's see, let's go now to the weekly. So just on a daily basis, it's a rocket ready to, it's taking off. It's not ready to, it's not looking to consolidate by any means. All right. So we just today, as of, let's see, this week, we just took out the high from, what is this? This is May of 2024. So over a year ago, we were up at these levels and came down to $4. So yeah, I like it, man. I see it going to about $6.50, $7.
Great stuff, man. Folks, check out that Tiger Forex report, folks. Teddy, thank you for the great information, man. Always appreciate it. Look forward to talking to you next week.
Take care, Tommy.
Take care.